Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's take a look at some of the stocks on the move today. I'm Paul Sweeney alongside Isabel Lee, and we're joined by Bloomberg's Denitsa Sakova. Denitsa, what are you looking at today in the market?
Let's start with one of the big gainers. Sarepta is seeing a big spike today. Of course, this comes after U.S. regulators reversed course and recommended that patients who can walk will be allowed the gene therapy Elevidys. Sarepta shares are up about 25%. The ticker is SRPT. 10 days ago, the FDA requested the company to pause all shipments. Of course, there were 3 deaths that were linked to the gene therapy. The company initially refused, then paused the shipments. This caused a massive sell-off in the stock. The FDA move today comes after pressure from patient advocacy groups who argued that families deserve the treatment. That said, this is not necessarily green light going forward. RBC Capital Markets says the move takes the edge off solvency, but won't eliminate the challenges for the company. And if you look at the stock price, that's clearly reflected. The stock price is down more than 80% year to date.
What about UPS? That's also seeing in the red. I think shares are down almost 10%.
Yes, if you year to date, the company is down 24%. Today, wow. Another difficult day. The parcel carrier declined to provide full year revenue or operating profit guidance, and it's coming off macroeconomic uncertainty. The ticker is, of course, UPS. It underscores challenges for the courier's effort to reconfigure its network. We know it's been reducing headcounts. It's been kind of moving towards smaller volumes, closing, consolidating facilities. And all of that so far is not really working. There is, of course, consumer pressure. That's one thing the CEO said that consumers are trading down in the face of tariffs. They're also struggling to recapture that big volume they had during the pandemic. Obviously, everyone was home, everyone was shopping. It's no longer the same thing. So more pressure today after a pretty rough start of the year.
Whirlpool.
Another difficult one. We're talking about outlook. They slashed their 2025 outlook and the stock tumbled 11%. The ticker is WHR. The company is saying that the boost it expects from making the majority of its appliances in the US is yet to materialize. They said about 80% of their production is in the US, which obviously with the tariffs should favor the company, but we're not seeing that. The company is down more than 20% year to date. One factor is that in anticipation of the tariffs, a lot of Asian makers have increased their export in North America.
Okay.
And that's created a historic oversupply.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.